Hello and welcome back. So this is a big update video for me because I recently received in allocation around 500k euro. So that equal to, I think, more than half a million USD. It should be around 550,000 USD. So that's a big amount of capital under management. And as you can see here, I'm in a little drawdown now. It's like normal, not for the past like 5-6 months, because it was like a very good period for my portfolio. And as you can see, from August to December, I was able to do a big performance and closing the year with a plus 27%, around 27%. So yeah, that was a great year for 2025. And as you can see here in 2026, I'm up a little, like 0.20%. Yeah, but as you can see from the comparison, the beginning of 2025 was even worse. And yeah, that's, I think, a big achievement for me. I recently got like a big capital allocation from the Darwinex index. Basically, they are managing 500 millions of USD, and basically the company is giving money, and that's like the Darwinian allocation, to each person that is set in a good position. As you can see, now I'm currently number 465 out of 638 on the gold Darwinian. But actually, in the big community in the fund, there are like, I think, like 9,000 people, because the Darwinian silver, or even more, around 8,000 people. The Darwinian silver is like the beginning phase where everyone start, and usually it's taking more than 1 year to achieve the gold status. But for my portfolio, it wasn't the case, because I was able to achieve the gold level in, I think, 7 months or something. Because I think around August, or maybe September, I was able to reach the gold status. And yeah, I think the first investment I got it on September. Oh no, wait, first one on 3rd of October 2025, and then it was pretty flat, as you can see here. And then I received like the around 300,000 euro investment from the Darwinex index. That's like a different index. It's like a big portfolio. It's a merge of different portfolio and different Darwinians. That's like my Darwins. That's my ticker, and that's my performance. And so this Darwinia index is like the overall fund performance, okay, and is made out of giving each best performer, as in this case I'm one of them, part of the capital, okay. And then doing this, the Darwinex fund is like diversifying all of the risk between multiple asset manager, like me in this case. And yeah, guys, when you reach this point, I think you have to be much more professional. In the next few weeks, I'm going to manage way better my portfolio, because as you can see here, this type of drawdown, I didn't really like it, because I think there are no condition for me to lose money in this period of time. The problem was like that I didn't had any mean reverse strategy, okay. My portfolio now is 100% breakout strategy, okay. Wait, in different ways, of course. There is like a low correlation between all of them, but in this type of period, it happened for the portfolio to be really correlated. And maybe it wasn't that much correlated, because most of the losing trades were made from USD JPY, okay. So because like it's a choppy time, so it's like the price is moving up and down every day, breaking the high, breaking the low, and then moving back to the mean. So yeah, that's the main reason, and I didn't really like this, okay. It happened also during this drawdown here, but yeah, I don't know why. I think the first drawdown here, it wasn't my fault, because like I start Darwinex with only 3 algorithms, and of course the performance was really bad. But then around here, I add all of the other algorithms, like the real portfolio, okay, and from there you can see like a much more steady performance. So yeah, but basically I could easily avoid all of this bad drawdown, and also this one, if I had mean reversion portfolio added to this one, okay. So the goal is not to having only one algorithms that is doing mean reverse, but is actually to build a different portfolio on maybe the same asset class, but like with mean reversion. So maybe it's going to reduce the profit of the other portfolio, the breakout logic and trend following, but overall in period like this one is going to help a lot. And yeah, after this big thing, that I think for me that's like a big thing, because with this amount of capital, if I'm able to achieve the same performance I did in 2025, so as you can see, that's like around the 27%. So from my point here, it's equal to actually 27%, because like I'm at zero. That means that I will able to make around 18,000 euro. 18,000 euro, it means like around 21,000 USD. And I'm living in Italy, and I think like only from Darwinex, if I'm achieving this type of goal and performance, this type of the amount of money I will able to make is kind of the same as the average pay in Italy. Okay, so that means on average people are making this type of money working 9 to 5 every day. Okay, with maybe 1 or 2 weeks of vacation holiday. Okay, and if I will achieve this type of performance, I will able to make around 21,000 USD in 1 year, of course, and that's only from Darwinex. Okay, without considering FTMO, my private portfolio, and other prop firm. Yeah, guys, this is like a big thing, and I think everyone can do it. It's like, it's not that hard. Yeah, you need skills, you need knowledge. Of course, like knowledge is the key. If you know how to show yourself, okay, show yourself to the open market. In this case, for example, maybe there are like some other type of proprietary firm or funds that are going to allocate money in some of your strategy if you can prove them that you are good. Okay, but of course, like in the finance sector, if you're good, you're gonna find someone that is going to allocate money, because in this case, this is 27% in 1 year with a 6.5 6.5% drawdown. That's insane, I think, because my ETFs or maybe index portfolio, where I have S&P, Nasdaq, etc., it did in euro, it did like probably 3-4%, okay, or maybe something like that. But basically, let's compare my performance to the S&P performance. Okay, as you can see here, we are on the S&P index. Okay, so S&P 500 index, and as you can see here, that's like the beginning of 2025, end of 2025, and if you measure the performance from this period of time, the index did 17% profit. Okay, so you could say, oh wait, that's really good performance. Yeah, of course. Let's say that my performance was 27% with minus 6.5% drawdown. Okay, that's my performance. But the S&P 500 did in the same period of time, of course, we said 16.6%, but with a drawdown of 17.78. Okay, so minus 17.78 with a drawdown, with a profit of 16.64. Okay, so you can see here why I said that my performance was actually very good compared to what the market offered during this time. Okay, you can see here, and there is like a thing that is called recovery factor. Okay, and it's measured by dividing the overall performance. So in this case, it's going to be 27 divided by the biggest drawdown. Okay, and you're going to find the recovery factor, and in this case, the recovery factor for the S&P 500 in 2025 is negative, because you're dividing 16.64 by 17.78, and that's, you remove the minus, is going just to be a factor, and actually it's very bad. In this case, in my performance, we said 27 divided by 6.5, and that's like a 4.15 recovery factor. That's really good. So I was able to make 4.1 times more than what I actually lost. Okay, and when you have this type of performance, you could say, okay, but your portfolio is not going well every year. Of course, you have to do backtest, deep the backtest. Of course, you have to do robustness tests. Okay, but also you have to consider that the S&P, that wasn't like a big drawdown. Okay, 70%, 17% was not that big. In 2020, S&P did minus 30. Okay, minus 35%. In my portfolio, it had probably 5 or maybe 7% drawdown. That's not live profit, that backtested, but it did the same in 2023 crisis, it had a big drawdown, but probably it was like around 10%. So as you can see here, it was again minus 27. Okay, so that's why when I said that my performance in 2025 was really good, why I meant that, because it was actually really good. So yeah, I think that's it for this video. You can have a 25% discount if you are going to use Darwinex, and this is like the coupon code. I'm going to put it in the comment of this video. So yeah, guys, if you want to really start something that it means actually sense and also is real data, live results, and a live track record, you should definitely consider Darwinex 0 or maybe Darwinex the normal one. I don't really care about this code here because I made much more money than what I paid. Yeah, I don't really care about that, but I think it's like great for everyone to start something and trying to get better month after month, trying to get better and improve, because you can see from here, that's a different section, that there are people that are actually managing like crazy amount of money. The first one here, this is like a Swiss fund, okay? So it's like actually a fund. It's not like something small, but it's actually managing 11 million, okay? And at point it was like at 37 million, okay? So those people, I think this fund here, it made around 1 million of euro of profit, okay? So yeah, that's actually really good. But of course, like you can't have this type of performance in small period of time, but like of course after a while you're going to increase the amount of capital under management. And as you can see here, this is like a Spanish, maybe also this is like a fund, I don't know, but also this is managing 30 million, 10 million, 4, 3, 3. So there you can easily, I think if you're good, easily achieve this type of asset under management. And guys, when you are managing around 1 million with a 20% yearly average profit return, you can easily make 30,000-40,000 euro a year, okay? So that's really good. And yeah, that's it from this video. I was just going to show you my last update. So this is like a mean reversion strategy on XAUUSD, and you can see it from here. Why I'm showing you, yeah, basically, if I started to trading this strategy before this period, I could have made a lot of money, okay? Because this is a mean reversion, and of course when the price is trending, it's not making a lot of money. In this case, yeah, it did something, but not here. But I have other algorithms to trade this type of market. But in this type of market here, the choppy market, these algorithms was able to make like a lot of pips. In this case, it's like 5.6%, and then here again, and then here again, and then it lost once, and then again profit here. So that's why now I'm shifting and not looking for new type of strategy, new logics, new bracket logics, or diversifying the asset class, but I'm going to do that in the future. But now I'm focusing on build a robust portfolio with other type of logics, of course, breakout, trend following, etc., but also mean reversion strategy. Same thing for S&P, Nasdaq, and USD/JPY. That's my plan. I can't really show this type of algorithm. This is like real ticks data, 94%, because back tested from 2018, but from 2020 or something was like 100% quality ticks data. So yeah, and this is like from Oanda TMS broker. This is like one of the best, and then also from Darwinex live. Yeah, that's pretty much it for this video. I'm just trying to show the old process here. And so yeah, that's pretty much it for this video. If you're interested, of course, like you can let me know in the comment. You can write me some messages and ask me everything. And yeah, that's pretty much it. See you in the next video.